Good morning, everyone. I'm immensely grateful for the Delphi Forum organization for the invitation that was extended to me. It's a lovely day today, isn't it? A bit early. I had party last night, a hell of a lot of partying, probably, including booze. But I think that we have one of the most interesting panels in this forum, comprised by really, interesting people and friends. Start from the guy left to me, Loukas, Karalis, chief strategist, Intrakat, Hellenic Stability Fund, lots of spells with big fours and banks. Then is Thanos, a senior banker with Unicredit located in Munich. Thanos Babanikas, over 30 years on the field, have financed some of the most important projects in this territory. Iossif Kiouroukoglou, the Bank of America guy in Greece and further afield. I think he's, the infrastructure genius when it comes to infra financing in Europe. And then it's my friend, Lambadarios, 30 years with Linklaters, partner, global head of infra, currently director at the International Athens Airport, and part of the finance committee, if I'm right. And last but not least, Timplalexis. It's Nomura in Greece and Greece in Nomura. I think that speaks for itself, being knowing the guy for very many years. And let's go straight to the topic. It's new means of funding for infra activity in Greece. And I will start with sponsor point of view, and the local sponsor point of view. Loukas, Karalis, what are the prospects and challenges of the infrastructure sector in the coming years in Greece, and what do you consider the role, or better say the impact, of the infra sponsors in the Greek economy? The floor is yours.
Thank you, Yannis. Good morning. Good morning to everyone. Thank you, Yannis. Good morning to everyone. It's a lot of pleasure being along friends, so very happy to see you. So let's start with the big picture. The global infrastructure gap is significant, with multi-billions required in sectors like transportation, energy, and digital technology to execute infrastructure projects, sustain growth, and meet sustainable development goals. Now, regarding the, let's say, Greece, I would say that, we are actually in a very good appetite and a very good momentum. There is a very, very positive spirit in relation to the infrastructure projects that are be running in the country. Just to give you an indication, next year and this year, more than 4 billion new projects will be running in Greece, like VOAC, Crete, like highways, Patra, Pyrgos, E65, and many, many other projects that are actually in place in the pipeline to start implementing. Most of these will be actually take place through the RRF. RRF actually it's a huge, I would say, tool for the infrastructure companies in Greece. 40 billion will be allocated in the country until 2026, and the impact actually in the GDP is expected to be close to 8%. Currently stands at close to 4%. So as you can imagine, the impact on the macro side through the infrastructure companies in Greece is expected to be very important. Just to give you also indication regarding the backlog of the infrastructure companies in Greece, the four big players have a backlog on projects that have been already signed close to 16 billion. Just to give you an indication, 2 years ago was 12 billion, and by 2026, if the RRF will be absorbed fully, the rate will be close to 20 billion. So as you can imagine, there's still a lot of growth on all the infrastructure projects in Greece. Now, apart from the opportunities and the prospects, there's also some challenges that, we are here actually along with esteemed colleagues to discuss and see how we can resolve them in the near future. The most important problem we do see as an infrastructure company is the the issue Greek banks face because of the huge backlog all the infrastructure companies has. And given the fact that they have reached the limits and due to the constraints they do have from SSM and, let's say, European authorities, they are struggling actually to open up more liquidity for the infrastructure companies. There is also a financing gap in there, which in any sense creates, I would say, delays not only on the payments but also on the execution of the projects. Also, what we do see here is the fact that although there is a lot of big pipeline of projects, there is a lack of, I would say, human capital. So we do seek for right people to execute the projects, but I would say it's quite difficult to find capable people and actually people to do these projects. Now, last but not least, we do see also a slowdown on the absorption rate in the resources of the RRF. Although we have actually started very dynamically 1 year ago with a very good absorption rate close to 80%, it seems that in the last 8 months we need to speed up. So.
That was quite an interesting introduction. Loukas, I will move to Thanos. Thanos, if I read correctly in the financial press, and correct me if the number is not accurate, do we face a 15 trillion infrastructure gap by 2040? And if we do so, how can we bridge it? Is that possible?
Thank you very much, Yannis. First of all, let me thank you very much for welcoming me here. I'm very excited to be back in Greece after so many years. Kalimera. I think, look, this is a very interesting and multidimensional question. We cannot cover it by just one source of financing or source of, is it debt or is it equity? We need a multitude of players to cover it. The state can be a facilitator but cannot, cover it. What I would like to bring to your attention today is the role of the equity players and infrastructure funds and how they have established themselves over the years. Infrastructure funds are alternative asset managers who actually, mainly after the Lehman crisis, put their attention into the infrastructure asset class. Alternative asset management is nothing new. They were doing private equity, they were doing real estate, but the infrastructure has been discovered since then. And currently today they're managing over $1.2 trillion worldwide. So you can imagine that this can be tapped to partly cover, the funding gap. To give you also a bit of a context, 6 years ago, this number was 400 billion. So you see how big the capital raising activity in this segment is. There are over 500 funds worldwide. There are large cap and mid cap. They have different strategies, but clearly their focus is in real assets. They do core plus, or value-add infrastructure, and they can do greenfield and brownfield situations. Greenfield means, for the audience here, some of the people here are of a younger age, it's effectively transactions, projects that you build from scratch, a lot of capital expenditure. Brownfield is something that exists and produces cash flows. The mega trends in infrastructure is important for us also to realize, also in the Greek context, because Greece is coming back in the menu, but it's part of a wider international market. I've been, as a listener, to a number of panels yesterday, and the topics are known. Decarbonization and energy transition is one very, very big mega trend, and the other is digitalization. You cannot find a single deal which doesn't have an impact, on the energy or an energy aspect on it, and an automation aspect on it. And infrastructure funds really place their strategies along these mega trends. Together with transportation, which people define it as new mobility, shaped alongside demographics, and most importantly, lately, the disruption of supply chains that are driven by the geopolitics. So what does that mean for us if we look at Greece and manage, the funding gap? I think we need to realize that we need to make situations investable for infrastructure funds, which are active investors. They choose deals, but they manage them over time. And we just need, this is my opinion, use the channels to make the deals investable for infrastructure funds.
Thank you, Thanos. Before moving on to Iossif, just a question which comes from what Loukas said earlier. And if you can answer, for a minute or so, which do you consider are the most decisive factors that will shape Greece's infrastructure activity in the years to come?
I think Greece has to play, on its strengths and use, of course, the state not as a financier of projects, but as a facilitator. I think the marketplace needs to be open for, if you like, the initiatives and the entrepreneurship of the players. And I personally see a lot in energy transition and in the transition in the digital economy. So data centers, for instance, fiber, this is something that will enable Greece to be more plugged into the world. This is something that, is just being started, to be realized. A lot of the big players in the digital space are choosing Greece to build data centers. That's one example. But I think generally my point of view is that it's the stable marketplace and a regulatory environment that will allow people to manage the risks.
Thank you, Thanos. Iossif, we heard a lot about infra funds. Can you please give us a helicopter view of the infra funding world today from a global perspective?
Sure. Thank you, Yannis. Firstly, I want to thank you for the invitation in this great forum and the very kind remarks in your introduction. You just setting the bar very high, so no pressure. So I think when we think about the funding of infrastructure projects, you have to start from the equity part, the equity piece, and what Thanos was just correctly saying, the infrastructure equity funds. And when we think about them, I think it's probably worth spending a couple of minutes, as you said, what is the current backdrop? Where do these funds currently come from in terms of fundraising, and how do they see the M&A activity, and where do we see in M&A activity? So it's true that last year was one of the challenging ones for the infrastructure fund community. Just to throw a couple of numbers, infra fundraising $77 billion roughly, on the back of a year before of $176 billion. And so stark difference, a number of drivers, a bit of what we call the denomination effect from the traditional infra fund sourcing. Infra funds are funded, LPs are typically pension funds or big asset managers that have very balanced private to public side allocations, but also some macro challenges and macro questions. And so CIOs, chief investment officers, were a bit careful in the allocations. But now things are improving this year, which is positive, and I think that more and more capital is becoming available. And despite that backdrop, infra funds are still sitting at close to near record high dry powder. Latest estimates point to about $345 billion. Again, that's an estimate. So there is capital to be deployed, and the question is how investors are thinking about going about it, and how they price things. So what has happened in the last 12 months or so, it's also a couple of other things. Firstly, the cost of equity has grown because just interest rates have grown. And so you cannot be raising capital aiming at single-digit strategies anymore. It's very hard. So infra funds will target at double-digit returns or mid-teens, as we kind of say this year. And that has implications for the asset values, what they're prepared to pay. Also, it affects what sort of assets they're trying to deploy the capital, and I think there is a bit of a focus again on the basics and kind of stable assets, core assets and core plus assets that can afford to target mid-teen kind of returns. And also, given that the backdrop I discussed, the M&A, turning a little bit to the M&A environment, M&A has also been quiet, relatively quiet last year. Because of these questions on the macro and questions on, how do the peak interest rates look like, a lot of owners of assets have been sitting on the fence and postponing transactions, especially in the transportation infra space where I kind of spend more time, and especially if you consider the major disruption that the industry went through with COVID, where especially in the transport infra side, people just stopped moving. So the good news there is that despite a drop of about 50% in M&A volumes in infrastructure last year, we see a lot of people now gearing up to spend time on processes. We've received a lot of RFPs as a bank the first couple of months as people get ready to participate in these processes. And we expect the activity to actually be a bit better this year. And so, we see assets that were sitting on the sidelines as for a couple of years now getting preparation. The owners getting in preparation to put them to market. But despite all that, it remains a buyer's market. So infra investors will continue to be cautious, will continue to discount business plans and look at them very critically. There's a big dislike for broad auction processes, as we call them. There's a more kind of propensity to get involved in the bilateral transactions. And we see that evolve also over the last year. We see this continue to be the trend. So I think the key takeaway is that the market is getting back into deployment mode. It's positive. Greece can benefit from that. Owners of infrastructure assets are bringing assets back to the market, which again is positive. It's going to create a little bit of, it will allow the market to find a new equilibrium of the valuations and the pricing. But when we think about Greece and what we think they need to attract capital here, there's going to be a little bit more competition and a little bit more kind of competition for focus by infrastructure investors to look at the situations here. So I think that's something we need to take into account as well.
Thank you very much, Iossif. Despite the competition, we have good grounds to be optimistic from what we heard from you. And talking about optimism, Ian, we got back our investment grade. What does it mean to the new sources of funding that are available for infrastructure today? Please give us a flavor as a lawyer and give us, the legal discipline much needed, in this panel.
I'm not sure lawyers know much about investment grade, but I'll pretend I do. Thank you for breaking my cover by saying I've been doing it for 30 years, because I assumed that everyone would think I was the youngest person in the room. But if I may speak as a foreigner who has a connection to Greece, but most of my experience of infrastructure finance has been outside Greece. I find it very interesting. The Greek market is, I think, extremely interesting because I think partly because of the crisis in Greece, foreign investors didn't touch Greece for a long time. They couldn't, because a lot of infrastructure funds of the sort that Thanos was talking about were actually not allowed, effectively by their own rules, to invest in Greece. And what has happened in a large part of Europe, and not just Western Europe, Eastern Europe as well, is the type of financings available have exploded. The interest in infrastructure as an asset class has changed beyond belief. When I started 30 years ago, it was regarded as risky, a very niche product, something that most people didn't invest in. It was mainly greenfield, so as you're saying, that where you build new things. And everybody knew that it ended badly. One of the first deals I ever did was the Channel Tunnel between Britain and France, a complete financial disaster. People thought of infrastructure as risky. It is now transformed completely. You now think of the infrastructure as super stable, super safe because of regulation. It is not. Anyone who's been following Thames Water, the big story in Britain, the water company that serves London and much of the southeast of England, is on the verge, or at least partly on the verge of going bankrupt. So it is not super safe, but but the basic regulated asset can produce the sort of cash flows that have made it an asset class that is extremely popular. And that means there's all sorts of funding available. In the old days, it used to be just project finance, super complicated, takes forever to negotiate. People end up hating lawyers because we all earn so much money from it because it went on for years. That has entirely changed now in much of Europe. I would say the majority of Europe now. The sort of controls you had in project finance where the borrower could hardly move without asking for permission or talking to its lenders about what it was going to do, what rights it was going to exercise. That's gone. That's gone. We tend now to talk in the market about infrastructure finance, not project finance. And the big difference, I would say, is it is much more borrower-friendly. It is much easier to do. There are far fewer controls. Typically, you would expect some sort of cash flow or at least a shorter construction period. The sort of assets that I've seen being done, I have seen total greenfields being done, particularly for fiber networks, data, energy transition, where the construction periods are not too long and it's clear the path to the cash flow is clear. The result is it's much easier to do, easier to negotiate, far fewer controls, much better for the borrower. As opposed to the old-fashioned project finance where you had hundreds of schedules telling the borrower what it could not do. So that is a form of finance that I personally, you know the Greek market better than I do, but I personally have not yet seen in Greece. But beyond that, there are different sorts of funding. Obviously the infrastructure funds themselves, who are extremely cash rich and desperate for things to finance. The only thing I'd say about them is, from a borrower point of view, they can be less reliable than banks in that they're in their long term and they have their own views. If you've ever dealt with anyone in the audience from them, if you deal with an Allianz or a Macquarie as an infra funder, a debt funder, it's a different experience from dealing with your in-house bank that you know very well. But that's an enormous source of funds. The other, I'd say, which is the new fashionable item, US private placements, which sounds tricky. It's not as tricky as it sounds. It's like project bonds, which basically what happens is an issuer, so bonds are issued by a company which on-lends the money to the company, the operating company. Those used to be quite tricky because you had to borrow all the money in one go, there was a cost of carry. The private placements have become fashionable because they're more flexible. You don't have to borrow all the money in one go, so there is not such an expensive cost of carry. And also because the sort of investors who are investing in it, although it does need investment grade credit rating, the sort of investors typically who are investing in it aren't relying on the credit agencies to make their view. They will do their own investigation, and so you don't need the sort of huge disclosure that you would get on a normal project bond, or indeed the sort of thing that those of us who are involved in the IPO in Athens Airport will know is a nightmare of a 144A investment opportunity where you're doing huge roadshows. So that's an enormous source of funds. The other one, which I think you mentioned a bit, Iossif, is of course that there is funding at a higher level. Midco, I'm not going to give details about how that's done. Midco financing, where basically the money is coming in at a higher level and invested down. Disadvantage of that is huge pressure on distributions, but I'm not going to go into more about that. Well, in a nutshell, there is a wall of money. There really is a wall of money to be tapped, all sorts of different ways of doing it. I have seen this in countries like Hungary, Slovakia. Why not in Greece?
Perfect. Thank you, Ian. Antoni, Greece does not exist alone. Greece is part of the Central and Eastern Europe. Given your role and your gravitas there, do you see a good story for Greek sponsors and banks in the CEE region? Do you see a good infrastructure story regarding the CEE region as a whole? The floor is yours.
Thank you. Thank you very much, and good morning, everybody. So, see, I think, Greece, clearly, if we take a step back, it's been through a journey the last, 10 plus years. Clearly, we're in a lot better place than what we used to be back in, 5 years and before, maybe. So, today, countries like, and I'll go closer to home, closer to Greece, like Bulgaria and Romania, they're very relevant to Greek companies and the Greek banks. Clearly, Romania and Bulgaria, for example, they just joined Schengen, I think, a week ago or so. They're close to, and they've been pegged to euro for a while now. You have low debt-to-GDP ratios. You have a big push on the infra front. I mean, yesterday as well, as we were here and talking to, I guess, PPC colleagues as well, they were signing a deal with Mytilineos. Big part of the pipeline there on the 2 giga renewables come from these regions. We shouldn't forget, I guess, again, PPC I'll mention because they did a very big acquisition in Romania. Recently, they bought from the Italians Enel Romania, and they're clearly keen, as they have announced, to grow more. And it's not only PPC, it's clearly, as we said, Mytilineos as well. We have people like Motor Oil or Hellenic that they have aspirations to grow the renewables portfolio in the region. But also, I'm sure Loukas as well maybe mention later, Actor, for example, the old Actor, and now Intrakat group, they have very big projects and very big aspirations in Romania. So I guess that maybe goes to the Greek banks as well and how they can be relevant there. Clearly, it's not the same story that we had back in the day where all the Greek banks were there, present, quite dominant in many situations in these countries. Today, clearly, after the Greek crisis, they had to retreat. Some sold their assets, but still we have players like Eurobank being in Bulgaria, for example, and they were very, very active. I'll mention Alpha Bank with Unicredit. They recently did a transaction in Romania. They have a JV. Clearly, Unicredit is lending it, and it's the biggest shareholder. But I think Alpha Bank as well has a history in Romania. But it's not only these two banks. I would actually point to the direction, and Loukas, I'm sure, has a very good recollection of that. The Greek banks have made a very good journey from the lows to today. Asset quality has been improved materially. You have the liquidity being present, huge access to the capital markets now, record levels, low levels on the interest rates, and of course they have the liquidity from the Greek depositors, which is quite significant, and they are keen to deploy that liquidity in the region because Greece, as Loukas said as well, there are many projects to be done, but they want to diversify as well outside Greece. And it doesn't, from the discussions we're doing with them, it doesn't restrict them the fact that they're not there present. They like the asset class, they're very comfortable about infrastructure in all sectors, and they're very keen to follow and participate in transactions happening there. We have discussions, I'm sure, the colleagues in the panel as well, with them for various projects that are happening there. So I think to maybe sum it up, Greece, I think, after the hard journey, it's quite uniquely placed to play a big part in the region.
Antoni, before moving on, I'm hugely tempted, to ask you a question, and probably I will extend, this question to all of you. I hear sponsors coming from abroad. I see Greek sponsors competing. this means lower IRRs. But how does this square with high inflation?
Yes, again, if we...
It's not an easy question.
No, clearly. But again, if I go a bit back, because I think history is a good, maybe, it's a good thing to have in mind. As we said, during the difficult years of Greece, you had the asset class being relevant clearly, and even we saw projects happening during the years where Greece was not investment grade. So I remember, for example, the transaction with State Grid of China that the IPTO was sold back in 2017, I think. So even at this period, which clearly wasn't the best, you had people being interested in that asset class. Back in the day, very understandably so, equity IRRs were quite high. I mean, they were reflecting the risk premium of the country, so that's okay. But back in the day as well, we had zero interest rates, zero inflation, actually sometimes negative interest rates. I think we had terms where we were flooring interest rate cost to zero, so not to go negative on loans. So I think it was a different environment clearly back then. Now, I guess fast forward 2019 elections, Greece improved a lot. Debt was still, inflation was still zero. Debt cost quite low. I think IRRs adjusted quite quickly to levels where we see in Spain or Italy. I remember again they had no transaction. Sorry, I'll mention PPC again, but they sold the distribution business to Macquarie. I mean, one of the few transactions that financials came back to play to Greece. Equity IRRs quite low. I think we probably all remember. But again, on the back of zero inflation and very low rates. Today, after COVID, after the geopolitical tension, the war in Ukraine, we have high inflation, very high interest rates. We had to jump from the low central banks. I think they're still trying to figure out what's going to happen. So clearly, it's a situation where IRRs have come down because of the Greece improvement and all that, and the debt cost in some situations is similar to equity IRRs, which clearly shouldn't be sustainable in the long run. Now, I think Greece, and maybe I close with that, Greece is again, I think in a halo effect, because it's been improving all this time, and we all know the macro is extremely solid. We have growth, unlike some other parts of Europe, and the Greek banks have been improving, as I said before, in all the sectors, including the liquidity and the cheap funding that they employ. So at the end of the day, for Greece, I think it's a caution to have Greek banks at a point where they can be really aggressive on terms, and I'm talking about the spread now, the margin. But again, if I link to the previous topic, and I'll leave it there, we need to find the equilibrium, because at the end of the day, we have so many projects to be done, and maybe the quantum cannot be satisfied, or because of concentration, as Loukas said as well, it's not easy to fund all this growth. So I think it's good to have the options that colleagues mentioned before, from the international banks or the funds to come in and play in Greece when it's needed.
Thank you, Anthony. Before extending same question to Loukas, I think I heard the word Romania. And Loukas, I see you're super active there. Do you want to spell out a few words about that?
Absolutely. I would say, as a company, we do have a motto. The motto is that the future of the infrastructure is not just about bridging today's gap, but adapting tomorrow's demand. In a sense, what does it mean? It means that definitely Greece, for the next 4 or 5 years, on the infrastructure is going to be a heaven. However, you need to diversify actually your business, and at the same time to have the right risk management in order to avoid potential issues of the past. What we do see as a group, we do see, for example, Romania, that is it's a very prominent market for the infrastructure businesses. The macro in the country are exceptional well. They are expecting to have a GDP growth in excess of 3%, 3.5% the next 2-3 years. There is also a lot of RRF pool in there to be allocated in the next 3 years. 60 billion of infrastructure funds will be actually allocated in various activities in the country. At the same time, because of the recessionary issues the previous years, a lot of Western European construction companies left the country. Now they are in the process actually of getting again back to the country. So all in all, if you put together all these actually characteristics, we do believe actually that in the next 3-4 years, Romania is going to be a very interesting market in terms of revenue and profits for ourselves, and obviously for the rest of the players that they're going to operate in the country.
Fantastic. Thank you, Loukas. The clock is ticking. So very quickly, Iossif, low IRR, high inflation. How does this square?
It's a good question.
Or can it square? And I'm coming back to you.
It's a good question, Yannis, and I think actually it's an interesting one because infrastructure is a big space, right? So maybe it would be helpful for the audience to define a little bit the various parts. So, if you look at the energy, it's a very different equation when you look, for example, transportation infrastructure, where there is a lot of embedded inflation protection in these projects, making this an excellent asset class for somebody to invest in high inflation environments like we are today. And that is also an opportunity for countries that want to attract investments in that space to do it in this kind of environment. That's point number one. Point number two, high interest rates. I think this is a decisive factor. Interest rates are probably the more important element here for the broader infra space because it impacts the valuations, it impacts cost of borrowing. And I think, again, when we think about Greece, it's actually sitting in a nice place because, as Adonis was articulating, there's been a convergence. On the one side, the perceived cost of risk for Greece has come down dramatically. I remember having discussions with some of the infra fund investors 5 or 6 years ago, and Greece was a very short discussion. It was out of the map. Today, it's actually fairly squarely in the center of the map, and it's a lot of interest we're kind of seeing. So you have Greece converging towards a lower risk perception for investors. At the same time, you have interest rates increasing therefore the required returns for these investors. And so Greece can benefit from this environment because, as I was saying, it's fairly in the center of investors' attention.
Perfect. Thanos, a few words on that, if possible.
Thank you. No, look, I think what we said is, for me, is the adoption to the real market reality. We cannot have a situation where, as in the past, deals and business plans were based on the fact that you have long-term cost of funding of 2 to 3%. This was not sustainable, and that actually had inherent risks that would actually torpedo the whole investment in any event. I think the investors will choose where to put their money, and therefore, of course, opportunities compete for that. But I would say that because the whole infrastructure space, as we said, has moved away from single assets to more modern next-generation infrastructure platforms, there are always ways to find solution to a complicated problem. To give you an example, a battery storage project, can give an IRR which is sub 10%. Is it attractive on its own? Probably not. But if you tap it into a bigger ecosystem around an adjacent renewables platform, generating electricity, which cannot be stored, it cannot be sold at the proper price, then that can be a fantastic add-on to hedge the whole situation and balance it out for people that actually look at it from not only strategic perspective, but an overall business perspective. So effectively, infrastructure is an ecosystem. Therefore, individual investment can be tapped into individual areas. And this makes it work. And I think for having infrastructure funds kind of behind that, they can use their examples, used cases from other markets. I think, Greece in the renewable space, we heard there is a bit of pressure right now, but there is nothing new to the experience that investors have made and companies in other parts of Europe or other parts of the world, and they can use these lessons learned to bridge the gap. Because, as we said, if you finance kind of a real asset, the real asset will stay. It will not just vanish within 3 years. It has a much longer dated horizon, and then it works.
Thank you, Thanos. We are reaching, the final round. I'm afraid that each one of you has less than 2 minutes. And the final question, which again will be addressed to all of you. And I will start from me, and Ian, we have discussed that in the past. Greek banks are offering super competitive terms, especially when it comes to loan tenures. Do you see that hindering, competitiveness for the infra funding products that you mentioned earlier?
Well, I think that's a very, very interesting question. I think it's interesting what Iossif and Thanos were saying about how infrastructure funds are super open.
Exactly.
Greece is the beautiful child of Europe at the moment. Twice the winner of the Economist competition, which is the best country in the world, and everybody's noticed this. And it's a country where foreign investors want to invest. Now, what I find interesting, there have been some quite big deals recently, some big acquisitions, including of minority stakes, where big infra funds have invested. What I think interesting, as far as I'm aware, although other people may know better than me, the funding has been, it's been typically of that sort of holdco finance I mentioned before. So it's basically the foreign investor has borrowed money in order to buy a minority stake, or indeed to buy a majority stake, but the funding has typically been the big four Greek banks. And actually I have a question for all of you. I think it's an opportunity for Greece to expand beyond the big four banks. I think it's actually an opportunity for the big four banks as well, because the big four banks, if they get into the mainstream of European financing, will find they have big opportunities outside Greece, which they don't have so much now because they're not in that market, is my view. Clearly for sponsors and for deals within Greece, to increase that competition must be good. So I'm really interested in your views, actually, about whether that's possible at the moment, realistic at the moment.
Thank you, Ian. Is that possible, Antonis, what Ian just described?
Look, I think I pointed into that when I spoke about the growth in the region, but I don't think it's only going to be Central Eastern Europe that Greece is quite close, and they have the Greek companies being there. We see the Greek banks being fully active, coming to London to meet us and see how they can get into European transactions. So the fact that they're fully back on track in terms of asset quality, liquidity, they're looking for the growth, because again in Greece there are projects, but loan growth is not where the Greek banks would like it to be. So they're really keen to grow outside Greece, as we said, in the Central Eastern Europe, but also in the other parts of Europe. Italy, Spain, UK clearly, and they're not present there, right? They just like the asset class, they like the jurisdictions clearly, they can get the returns that they want, and they're keen to get in. So I think that will allow them as well to see the other side, which I guess you kind of alluded to in seeing the other projects, other products, and open kind of their mind. They really had to contract back in the day because of the crisis, right? We wouldn't expect them to do what they're doing today 5-10 years ago. So I think it's probably the perfect situation to be in order to bridge the gap and get where we need to be.
Iossif would love also to hear your views on that, if quickly.
Sure, thank you, Yannis. Look, I think it's a great opportunity both for international banks to come in Greece and play, because Greek banks are facing concentration issues to the big players in the space. There's also a great opportunity for Greek banks to deploy liquidity outside of Greece, because Greece is a finite market. It's a relatively small market in the European context, right? And if you operate within Greece, you need to be a bit more extrovert, a bit more international. And, you know, if you're a bank, you don't necessarily do that by acquiring another bank. You can even do it by deploying your liquidity outside the country, basically. And infrastructure is a great place to do that because, you know, you can deploy in size and you can deploy in assets which are relatively low risk compared to other exposures. And I was very happy to see that actually this happening actively. Recently, there was a large refinancing in the UK, the AGS platform. It's a platform of 3 airports, Aberdeen, Glasgow, Southampton, owned by Ferrovial Macquarie. And when I read the headlines were saying AGS refinancing that 2 Greek banks involved. So it's a good opportunity for Greek banks to deploy, and I think that's something they are, and they should look at. And now, on your question about in Greece, the fact that you have international players also coming in to either partner with local players or by themselves is one area where the Greek banks can continue to be relevant because the concentration issue there is not an issue. In fact, the counterparty quality tends to be very good, so it's a good business. But I think there's also space for international banks, either European banks as a first step perhaps, to come and play in the space. Now there might be a bit of a side effect there because the cost of funding is slightly different than the one for Greek banks, and that may create a bit of a pressure on the rate for the Greek companies that are borrowing from there. But the market will always find an equilibrium, and I think there is scope for that to happen.
Thank you, Iossif. Thano, now that you're back in Greece and you wear a double hat, I guess that this question will be more difficult for you to be answered or not?
Look, I will not make a political statement, but I can only echo to what my colleague said. I think there is room for both international and domestic banks. I think the international banks are not here to compete with Greek banks, but to complement each other. As Ian mentioned, there are so many tools out there, and not far away. You know, we're not talking about things that are done in the US, but really done a few kilometers away, you know, in Europe, about holdco financings, warehousing facilities, construction bridge financings, infrastructure financings. So therefore, we can both benefit, you know, from each other. And I think that will also foster what I would like to see as a next step. I mean, right now, of course, you know, Greece is very well back in the menu for all of us. But, you know, the next step is not just to a handful of large transactions, but actually a plethora of mid-market, mid-sized transactions, as is being done in other countries. So open it up, create a vibrant, you know, mid-market where we will have deal flow and we'll have exchange of ideas and financing.
Perfect. Thank you, Thanos. I think we started today with the sponsors, and we will end up again with the sponsors. Loukas, what's your view, the sponsor view on that?
I just confirm what my colleague says. We spent many hours, I would say, during the weeks discussing optimal capital and financing structure. So definitely agree that, you know, this is a complementary business. Obviously, the core financing business will be with the local banks. However, we do see a lot of value having also international banks, supranational banks, insurance companies, because we do see also insurance companies actually looking for providing sureties on all these projects that are actually running and will be running in the next few years. And why not, through this healthy competition, the charges actually are expected to be reduced. So I think it's a benefit for everyone, especially for the sponsors.
Thank you, Loukas. I am afraid that we are reaching the end. I hope that you enjoyed, as we did today, from Antonis Timplalexis, Nomura, Yannis, Athens International Airport, Iossif, Kiouroukoglou, Bank of America, Thanos, Babanikas, Unicredit, Loukas, Karalis, Intrakat, and me, Yannis, Kourniotis, Lambadarios law firm. Have a great day. Enjoy the rest of the day, and see you all next year, guys. Take care.